Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Boy, do we have big news for you in this piece this week. Charles Rotblatt, our senior market analyst at Zacks.com, brings something to our attention that I find pretty interesting. It has to do with gold. That's what's on the Rotblatt radar this week. Now, the rally in gold prices has not gone unnoticed, least of all by this gentleman here. Nothing gets past him, let me tell you. But there's something going on that's, I don't know, not tracking right in my mind when it comes to gold. Gold is rallying, the commodity, the metal is rallying, up, toward $1,000 an ounce. I think you have some statistics that recently it might have even closed above $1,000 an ounce. But it's not translating to the gold stocks, that performance, is it?
It's not in terms of earnings estimates. And first, let's go back to gold here, and I'll call up the chart. This chart's courtesy of Future Source, so love to give credit where it's due. But as people can see, since November, gold's made a huge rally. We're starting down here about $700, and actually we're trading at about $965 this morning, Wednesday morning, February 25th, as we tape it. So slight pullback over the past couple days, but we've seen gold really soar since November. Couple reasons playing at it. The big reason why we're seeing gold rally so much, though, is just plain fear. People are worried about the banking system. They're worried about the economy. The market's doing terrible. Can't make any money in pretty much any other commodities.
Well, they think there's another market contagion lurking around the corner.
Right, and all those factors are saying gold price is up. Now, the question is, if gold prices are going up, the profits for the people who mine gold should be rising as well, and they're not. Even though we've seen some gold stocks themselves do pretty well over the past couple months, great trade, we're not seeing it really translate into higher profit forecast. It's interesting because when we look at the entire gold mining group, we have over the past 4 weeks 37 estimates being revised upwards, 42 being cut. So that's a Zacks revisions ratio of 0.88. Relative to what we're seeing in most every other industry group, that's actually a pretty good number. But if higher gold prices were really translating into improved profit forecast, we should see a very positive ratio, and we're not.
So why isn't it working that way?
Well, there's a couple of reasons. One could just be that analysts simply don't believe this rally behind us that we're seeing on this chart in gold's going to continue. Some analysts could actually believe gold prices are going to drop, that gold's in a bubble. Part of the reason for that is we're looking at deflation. There's concerns about emerging markets, people not having enough money to buy gold, lower demand for gold jewelry. All that's playing a role. Other metals are playing a role. One of the mining companies recently came out and said they're seeing zinc prices drop, and that's hurting their profits. A lot of these mining companies, they might either own copper mines, or when they're extracting gold, they're also extracting other metals. Those lower prices hurt margins. So you have that going on. You have the overall worries about the debt markets. They're affecting their ability to do deals, do expansion plans. And I think also you're looking at some of the problems we're seeing elsewhere in the mining sector. Certainly, if you look at some of the companies that actually make the mining equipment, such as Terex or Joy Global, we're seeing their profit forecasts drop. And it's one of those cases where somebody sees a problem in one part of the sector, they're looking across the rest of the sector and saying, well, this company could have problems as well.
But is that the right way to look at it for the analysts? Are they being too pessimistic?
Possibly, and that's where the big question, the $64,000 question, lies. When we look at what happened with oil last year, during the first half of the year, analysts consistently had to raise their profit forecasts because they misjudged how high oil would trade. When we got to the second half of the year, analysts had to constantly start cutting their forecasts because they misjudged how much oil would fall. Now, when we take a look at gold, the question is, are analysts misjudging where gold prices are going to trade at? The answer is we don't know. It's interesting because even when we look at the individual stocks within the gold mining group, we're seeing a lot of stocks where you might have 3 or 4 analysts raising estimates, 5 or 6 cutting estimates, but then you have the other half of the analysts covering the stock not changing their earnings estimates at all. So you're really in a situation where you're looking at the earnings estimates and there's not a very clear picture.
Quickly, a lot of people use gold, the metal, as a hedge in these tough times. Can you use gold stocks the same way?
You can. Gold works better. There are some gold ETFs. We have an article on the site right now which talks about how you can actually put pure gold into your IRA. There's some stipulations involved with it. But the other thing, if people are looking at gold stocks themselves, they may want to look at the ETF versus the gold stocks. The reason is a lot of these stocks tend to be small. In fact, if you take the entire market capitalization of the mining gold industry group, sum it all together, it's slightly more than what Google's worth right now. So for some investors, if you're looking to either go long or short, and understand there's a lot of disparity, so possibility these stocks could go in either direction,
right.
You could actually take a look at, at the Market Vectors TR Gold Miners ETF. This is actually a weighted ETF, means it gives a higher weighting in some gold stocks than others, but it does look at gold stocks, mining stocks. It allows you to buy the broad universe, so you're not tied to just one mining company, and it actually gives you a little bit more volume, a little bit more ease, especially if you're looking to possibly go short the gold mining stocks.
All right. Do you own any of these stocks or ETFs that you mentioned?
No, I do not.
All right. You'll want to get over to Zacks.com and check out this piece under the industry rank analysis banner for this week, because this is very interesting reading, and if you are considering staying invested in this current tough time in the market, this is probably something that you definitely will want to take and digest and make a part of your maybe your plan going forward. With Charles Rotblatt, I'm Terry Ruffalo.